Hello and welcome to the weekly market metrics. We are in week 42 of the year, which means we have just about 10 weeks left in 2025. Just in case you had planned something, New Year resolutions type of stuff in the beginning of the year, forget about it because it's too late now. Might as well start again in 2026. Anyways, with that, let's move to the more mundane stuff like market metrics for this week. What a lovely green week this was. I'm seeing this kind of positive momentum after such a long time. Though Donald Trump tried to spoil our weekend last week by threatening to impose an additional 100% tariff on imports from China, but the bulls sensibly ignored him and went roaring. The positive sentiment was also fueled by the news of some progress on the India-US trade deal and perhaps general festive positivity added to it. The momentum we've been seeing for the last 2 weeks continued this week as well. Let's get started with the charts and indexes. First is our favorite Nifty 50. After 15 long weeks of consolidation, that's close to 4 months of consolidation, the index has finally broken out of the upside above 25,650, a range that had tested everyone's patience. And this breakout comes with solid strength, 3 consecutive green weeks in a row. This week alone, Nifty moved up by 425 points or 1.68%, marking another strong close on the back of sustained buying momentum. It's also interesting to note that this 1 red candle, 3 green candles pattern that has now repeated twice. There's no science to it, but that's just something I noticed. Now that the breakout is confirmed, the next resistance lies around 26,200 and 26,300, which also happens to be Nifty's all-time high zone. That's just about 2.2% away from where we are right now. Will we see a new all-time high next week? Let's hope so. Fingers crossed. Looking at the daily charts, Nifty continues to show strong momentum with 3 consecutive green candles, each closing higher than the previous day. And look at the size of the candles, each bigger than the previous one. The index has decisively moved above 25,450, which was last week's resistance zone, and more importantly crossed 25,670, a multi-week resistance level that now acts as a crucial support. The last 2 trading sessions alone contributed a sharp 1.53% gain, adding about 386 points, a clear sign of sustained buying interest. The next resistance is around the 26,200 and 26,277 zone, which is also close to the all-time high levels. However, I must say before attempting that, we might see a short-term pullback towards 25,670 region, as markets sometimes retest previous resistance levels, which now will act as the new support zone before moving higher. Also, 26,000 being a big round number may act as a psychological resistance before we make another attempt towards new highs. But overall, the trend remains positive, the breakout has strength, and bulls are firmly in control. Moving to the hourly time frame, Nifty tested the 50 EMA once on Tuesday, 15th October, which was also the expiry day. But after that, it stayed comfortably above the moving average for the rest of the week. At present, the index is about 340 points or roughly 1.34% above the EMA, reflecting sustained strength and momentum in the short term. From here, we could either see a minor pullback as prices cool off or a continuation of the current uptrend if the momentum persists. Let's wait and see whether the EMA catches up to the price or the price comes down to meet the EMA. Trend followers amongst us would know what I mean. Now moving on to the Nifty overnight versus intraday structure. Talking about the intraday versus overnight moves in Nifty this week, most of the action clearly came during market hours, with the intraday segment contributing to 1.63%, while the overnight moves remained largely muted at 0.48%. One pattern I've noticed is during strong uptrending phases, both the daytime momentum and the gap moves tend to align. And that's exactly the kind of phase we are in right now. Though if you look at it on a yearly time frame, Nifty is up 7.63% from overnight moves cumulatively, while intraday performance also stays in the green at 2.37%, largely supported by strong intraday rallies over the last 2 weeks. Moving to Bank Nifty on the weekly time frame, the index has finally done it, hitting a new all-time high this week. You see, in a market clouded with uncertainty and negative headlines, it's easy to miss our banking index, which is at a record level right now. And this is where ignoring news and following the price helps, I think. This week marked the third consecutive green candle, with Bank Nifty rising 1,104 points, or about 1.95%, and forming a strong bullish Marubozu candle, a clear sign of momentum and conviction from the bulls. Now that the index is trading above its previous all-time high, Bank Nifty is officially in blue sky territory with no resistances ahead from a technical standpoint. The previous all-time high level around 57,600 will now act as a strong support going forward. The structure looks clean and the trend remains strong, and the bulls clearly continue to lead the way. Looking at Bank Nifty on the daily time frame, the index continues to mirror the weekly strength, now trading above its all-time high with no technical resistances ahead. The previous resistance zone of 57,350 and 57,650 should now act as a strong support area, providing a solid base for any near-term consolidation or pullback. Just like Nifty, Bank Nifty has also posted 4 consecutive green candles this week, reflecting sustained bullish momentum and strong follow-through buying across sessions. Overall, the trend remains firmly upward, with both the daily and weekly charts aligned. The bulls clearly have an upper hand. Looking at Bank Nifty on an hourly time frame, it mirrors Nifty's behavior, holding firmly above the 50 EMA throughout the week, with only a brief pullback on Tuesday that tested but didn't break the moving average. In fact, Bank Nifty has been trading above 50 EMA since 1st October, Wednesday. That's like 17 calendar days or 12 trading sessions of holding strong above this key level, a clear sign of sustained momentum. As of now, the index sits about 881 points or 1.55% above the EMA, indicating continued strength in the uptrend and solid support from the short-term moving averages. Talking about the Nifty Midcap Select, the index took resistance near the 13,260 zone, as mentioned in the last week's video, making a high of 13,290 before closing almost 1% lower at 13,160. The Midcap Index ended the week with a modest gain of 11 points or 0.09%, making it the weakest performer among all the 3 major indices. Interestingly, the large red candle from 3 weeks ago still remains intact. The index hasn't managed to close above the high of that candle, which continues to act as a short-term resistance zone. For now, the trend remains sideways to mildly positive, but a decisive close above 13,260 and 13,300 would be needed to confirm a fresh breakout. On the daily time frame, Nifty Midcap Select had a mixed week with 2 red candles and 3 green ones, showing some hesitation near the higher levels. The index once again faced resistance around the 13,260 zone, the same level highlighted from the weekly chart, and turned lower from that region, confirming it as a strong supply zone for now. On the downside, the next support lies near 13,050, which should act as a cushion in case of further pullback. Overall, the trend remains range-bound in the short term, with 13,260 acting as a ceiling and 13,058 providing the floor. A breakout on either side will likely set the tone for the next move. Moving to Sensex on a weekly time frame, the index gained 1,451 points or about 1.76% this week, making 3 consecutive green candles in a row, similar to the pattern seen on Nifty and Bank Nifty. It has also now moved above the 83,100 resistance mentioned in the last week's episode, confirming the breakout and continuation of the bullish momentum. However, the index faced some resistance around 84,100 level, which will act as an immediate resistance for the coming week. The next major hurdle lies around the area of 85,600 and 86,000, roughly 2.4% away from the current levels. Overall, the structure remains strong with clear higher highs and higher lows, and with the momentum on the side of the bulls, Sensex looks well positioned to challenge its all-time highs soon. The daily structure of Sensex looks quite similar to Nifty, with price action following the same pattern of strength and consolidation. The resistance and support levels also remain consistent with those highlighted on the weekly chart, maintaining alignment across time frames and confirming the broader bullish structure. From this week onwards, we made a small change in the ROC sheet. It now shows to-date performance. That means change percentage 1 week to date reflects the 1 week change, while 1 MTD, 3 MTD, 6 MTD, and YTD show respective period to date performance. For example, 3 MTD represents the performance from August to October, the current ongoing month, and 1 MTD would be the current month's change. Moving to the ROC table, it's been a solid week across the indices, and taking a look at the year-to-date performance, banks continue to lead, followed by Nifty, SENSEX, and Midcap, which is just about in the positive territory. We still have November and December ahead, and historically these have tended to be strong positive months for the markets. Let's see if the trend holds this time too. Coming to the directional bias, same as last week, another all guns blazing sort of week. Nothing much to see there. Talking about the sectors driving this week's uptrend, we have 3 new entrants leading: FMCG, consumption, and financial services. Realty and bank are carryovers from the last week's strength, continuing to outperform with weekly gains of around 4% and 1.95% respectively. Overall, sector leadership continues to rotate, but the broad participation across defensives and cyclicals suggests the market's strength is well distributed and not limited to a few pockets. Coming to the range, expiries, and wicks this week, the range data this week shows a clear expansion in volatility across indexes. For Nifty, the weekly range jumped from 480 points, that is the 10-week average, to 721 points last week, while BANKNIFTY's range widened from 1152 to 1600 points, and SENSEX saw a surge from 1584 to 2391 points. Even the 5-day average daily range is now higher than the 10-day average, reflecting an uptick in the short-term volatility. Friday stood out with the highest range across all indices, though it also experienced sharp intraday swings. Talking about Nifty's expiry on Tuesday, the index saw a 250-point range, a clean downtrending session with minor pullback post 12:30 p.m., making it a challenging day for traders despite the clear direction. On a different note, the Nifty 1DT ATM straddle for the upcoming Monday expiry, which is 20th October, is trading around 160, which is quite elevated given the strong up move this week. Normally, when markets rise, volatility tends to cool off, but that's not the case here. The premium looks a bit inflated, likely because traders are pricing in some weekend risks or staying cautious after last week's surprise headlines from DJT. Who knows, but the straddle pricing does suggest a hint of nervousness beneath the surface. On the other hand, the Sensex expiry was dominated by a wall crush in the morning, followed by a steady uptrend with almost no pullbacks spanning an 824-point range. It proved to be a tough session for non-directional players, especially those caught on the CE side before the trend extended higher. The traditional fixed stop loss on straddle folks would have done well. One strange observation from this expiry was that all FAR OTMs, which are penny options, even those 3 to 4% away, were trading around 4 to 5 rupees at 2:40 p.m. Something I've never seen before on a Sensex 0DT. I even took a screenshot of the option chain to capture it. Not sure why it happened, but it definitely stood out. Any thoughts on what could have caused it? Let me know in the comments if you saw it too. In short, volatility is back, and it was a great week for those who played direction on expiry day. Talking about India VIX, it inched up 15% or 1.5 points to 11.625 levels. As we discussed in the last week's video, when volatility was at a multi-year low, and we said it could spike any moment, and that's exactly what happened this week. Now let's take a look at commodities this week. Similar to the ROC table for indices, here's one for commodity futures. Gold and silver are unstoppable. I really don't know where and when this is going to end. I'm more concerned about silver than gold though. Anyways, talking about the numbers, gold is up 8% this week, 12% in a month, and 31% in 3 months, and shining at 62% YTD. Silver's rally is even crazier. 14% this week, 18% this month, and 51% from August to date, and 81% this year. Copper is quite mellow compared to that. It's steadily climbed 1% this week and 10% in 3 months, but energy is a bit negative. Crude oil is down 4% this week, minus 9% in a month, and minus 16% in 3 months, while natural gas has plunged across the board. As I said in the past, it's a great short candidate generally. The silver ETF premium, which I spoke about in the last week's video, has thankfully vanished this week. In short, we've had 3 consecutive positive weeks so far, and we expected a festive mood to set in, and it sure did. Not just in equities, in commodities as well. Moving to what we can expect in the coming week. Now, the next week is going to be a short one with just 3 trading sessions and a Muhurat trading day on Tuesday, as Wednesday is a holiday on account of the Hindu New Year. Talking about the expiries, because of the day offs, Nifty expiry moves to Monday instead of Tuesday, while Sensex expiry will continue to stay on Thursday as usual. There are no major announcements or scheduled events lined up for the week, so it should be a relatively calm festive stretch. But given the uptrend for the last 3 weeks, I do foresee some consolidation post-Diwali before the index makes a new all-time high. But you never know. That brings me to the end of this episode. Happy Diwali and Saal Mubarak to all of you. Don't forget to subscribe and stay tuned for our special Muhurat episode where I'll dig into 10 years of data to uncover some interesting Muhurat day statistics. The episode will go live later today. See you soon.